Mr. Sarupin, and then Mr. De Villiers.
Okay. We'll have to start.
And I see Mr. Marolong just joined as well.
Okay. Let me get the watch color right here. My video is failing me. The background has got issues. Okay, let's start with our meeting. The meeting is about National Treasury and SARS briefing the committee on the draft rates and monetary amounts and amendment of revenue laws bill and tax proposals. The meeting is officially opened. You are all welcome. Welcome members of the committee. Welcome officials from Treasury, Commissioner SARS and his team, PBO, and the entire team from Parliament, guests, and the media. You are all welcome. Are there apologies?
Apologies from Mr. Voter Wessels.
Okay. Honorable Wessels is apologized. Let's move right away to item 2, which is the main item for today. Who's leading? Is it Momo? Is it Yanga? Who's leading from the side of finance? Is the Deputy Minister in the platform?
I don't think the DM is online, Chair, but Mr. Mamoniat is leading the delegation and he just joined.
Okay. Over to you, Momo, on item 2, briefing the committee.
Thank you, Chair. And thank you for this session. Let me just put on my camera. Yeah, here I am. I don't know if the presentation has been loaded.
I can do that now.
Yeah, Chris. Yeah, thanks, Chris. No, thank you, Chair. And sorry, just with the holiday on yesterday, I think we didn't anticipate, we forgot that it was a holiday when we arranged this meeting. So we have been rushing around, so apologies for that. I've got Chris Exelson and Yanga Mputa with me, and Franz Tomasek from SARS, and many members of our team. I've just not listed them, Chair, because it's when people join on camera, it's difficult to know who's here and who's not here. So I also want to thank the committee chair for allowing us to make this presentation. It's something that we always feel is important after every budget, because there's a lot of proposals in Chapter 4, Annexures C, and other related chapters. And often, sometimes we found that when we don't do this presentation, that we tend to then only do it in detail in July or August, long past the budget. It's only in years like when we've increased VAT or other years before, it used to be a routine that soon after the committee files its budget report that we make this presentation soon after that. So I really want to welcome this, and I hope it becomes an every year affair. And I think you'll see why, Chair, when you go through the issues. So the next slide. Next slide. So, Chair, I think I know that members will know this, but just to remind everyone, the Minister of Finance announced the tax proposals in the budget on the 23rd of February. We did on budget day, just on the website. It's not table, Chair, so it's not part of the formal documentation, because as you know, with tax bills, we tend to first make the have a draft bill that the committee has hearings on, and then we finalize the bill because of the Money Procedures Amendment Act, the provisions on how they apply to money bills. So that bill is already out and out for public comment, and of course. It deals mainly with rates and thresholds, which is an easy bit to do. So if we change any rate, it's just changing a number. Of course, we take public comments on that, but typically comments on a rate are a judgment call, taking into account many factors like the amount of revenue we need to raise, how a particular tax may compare internationally, whether there's perverse outcomes, and so on, because people game the system because one tax relative to the other is higher or lower, whatever the case may be. So it's a judgment call, and tough decisions are made on rates. The other provisions, Chair and honourable members, is really to deal with the more complex issues. So as you've seen, when we do the legislation, it's very detailed. We may be changing a tax base, how we write the legislation, all of that we only publish in July. And we do that because tax proposals are market sensitive. There's no consultation. We don't go to anybody before budget day and ask them, what do you think this tax should be like? People are free to make suggestions, but we don't respond to them. We don't engage with anybody. They can send us their comments. And we start the process of consulting immediately after budget day, where we then meet with stakeholders, depending on the issue, to get their initial views and comments on the proposals made. Because typically, what we have in a budget review is still not enough for people to know what's actually required in terms of the tax. People only get to know that once they see what the actual draft legislation says, because that's what matters to them, not necessarily what we say in Parliament or what's announced by the minister. It's what goes into the actual legislation that matters for taxpayers at the end of the day. So once we've done the consultations and have the draft bill in July, and hearings are held, then we table the bills. So the rates bill, we've published it on budget day, but as soon if the committee were to start the process earlier on hearings, in other words, de-link it from the TLAB and TALAB, which have been done most years recently, that the committee has waited till those bills come out. But if the committee chooses to, for example, have hearings next month or the month after, then it could be possible that the minister could table the final bill in May, and even before then, Chair, if the Parliament is able to have its hearings earlier. In terms of the TALAB and the TLAB and TALAB, that though we publish it in July, and there are hearings, the formal tabling of the bill then, as you know, is done around October, just around MTPPS or a week or two after. So that goes quite late in the year. Next slide, please. So, Chair, I think it's important when we look at the tax proposals today, just the context, and fortunately it would be fresh in the minds of members. But so I won't go through this in any detail, but just to remind ourselves that our economic growth still remains low. Treasury is projecting 2.1% in 2022, and in outer years it's only set at one. We're projecting at 1.8% over the next 3 years, which is far lower than the economy needs. We need to get to at least 3% just to match per capita population growth and so on. But actually, I mean, we want to get to 5 or 6%. That's what we aim for. In the medium term, the fiscal policy has been focused on reducing the budget deficit and stabilizing the debt to GDP, which, as you know, was not being contained. But fortunately, in this budget, given the the higher than projected revenue, we were able to bring down the debt to GDP lower, and for government to realize primary surplus in 23-24, which is a year earlier than projected. So the big issues, Chair, are related, of course, to fiscal sustainability. I won't go into what the budget proposed. It was a tough budget, and it's still subject to significant risks. And Chair, I should add that, you know, the risks at the time of the budget, economic growth, rising global borrowing costs because of high inflation. We didn't know the outcome of the public service wage hearing that was a decision that was given by, or judgment was given, I think within a week after the budget, and the poor financial condition of many of our SOEs. And all this, Chair, was before Ukraine, before the Russian army went into Ukraine. And of course, we've seen since then how markets have reacted, the impact on the fuel price and other commodity prices, and so on. So obviously, the budget hadn't taken that into account. I think the key point also that we made was, though we were able to not increase any taxes, and in fact, we brought down the rate on the corporate income tax, that if there were any large permanent increases in spending, as you know, that there's a whole review on getting some form of grant, a basic income grant, for example, or even if you were to look at health and so on, these will have to be accommodated by permanent tax increases. And the reason for that is that if it's any form of recurrent or operational expenditure, you can't really fund that by borrowing. You've got to fund that through getting revenue from the tax system. But we'll come to that, Chair. Next slide. So, Chair, the key considerations that have been driving the tax proposal this year is obviously, first and foremost, the primary objective, which is to raise revenue for the state. And let me say that that has been a big objective, because as we saw in the budget, there were significant increases on the expenditure side, for example, and
recording in progress.
Say by increasing the social relief distress grant that, if I remember, came in at just under 50 billion rands. We needed to find the revenue for that. So that was certainly a key objective. It's always the key objective, but I think more than in other years, we needed to make sure that we were going to raise enough revenue for the expenditure in the budget. Of course, there are also secondary objectives, and they may be secondary, but they are important. Environmental objectives, health objectives, because in our tax system, we try and correct for what we call market failures, and by dealing with externalities. So, for example, we know that obesity is a problem. Sugary beverages are not the only, but a big factor. And, does having those strings around take that into account, the cost to society of obesity. Similarly, do polluters pay for what they cause? How do we deal with that externality? But, even as I say that there are secondary objectives, I think, let me say that taxation is a blunt tool and can't achieve even these objectives by itself. You need complementary measures. And if you don't have complementary measures like, let's say, educating people on obesity, providing alternatives to the type of foods, bad foods that we eat, and to have them at an affordable price and so on, all of those are important objectives, are complementary measures that need to go with whatever we're doing through the tax system. The tax system by itself will not solve those problems. I think we're clear about that. I should add, and just the last point, that we don't find that earmarking is ever an optimal policy. It weakens the budget system. So we tend not to earmark those funds. But what we do is try and deal with them on the budget side through the expenditure system. So, Chair, the big question for us in tax policy was, what's the optimum level of revenue required for the next 3 years? We don't stick to any tax to GDP figure and so on. But I think we were showing that our tax to GDP has been going up. And we just need to take account of that, because the key issue is more how does the tax system impact on economic growth? If there's sudden increases in a tax to GDP, it's likely to adversely impact on growth. Of course, it does depend on how the extra revenue is spent and so on. So we're not saying that's always the case, but certainly if it goes to operational expenditure, it's likely it's going to impact quite adversely on growth. But those are the questions we ask. So I'm not making a statement that it will. I'm just saying these are the questions we need to ask. We also need to ask questions like, what type of expenditure is best funded from the tax system? So as I said, if it's recurrent expenditure, you've got to do it through the tax system or through some form of user charges. If it's capital expenditure, it's much easier to borrow for that, particularly if there's longer-term benefits and it's intergenerational benefits. And Chair, I'm raising the issue of user charges because we do have an unfortunate trend that many who can afford it don't want to pay. We've had that problem with e-tolls. So the question becomes, if people who are actually using the service, and they tend to be also in the high income end, then who's got to pay for it? If you use the tax system, it means other taxpayers are paying for it. And so it just imposes a further burden on the tax system. And of course, the questions of how to fund grants, education, health, because these are operational expenditure. They're necessary expenditure. So we're not making a judgment call. We're just saying these are probably priority expenditures, but how far can the tax system go to fund them? That's the big question that needs to be asked. I think, Chair, I want to just leave with two other points. When introducing new taxes, I think it's important to ask, is it to raise revenue or is it to address some problems? For example, the discussion on the wealth tax, and there were questions during the budget hearings, and we have taken steps to start recording wealth. But often what people don't realize is, our very wealthy are such a small proportion that if you increase the wealth tax, it's not actually going to raise enough revenue to fund, for example, a basic income grant. It just won't. It's significantly less. It's going to have to be done through increasing other taxes. So we just want to put those kinds of points on the table. These are just facts, Chair. We're not taking a view on it. Of course, there may be other reasons that we may feel that the rich are not paying enough taxes, even though our system is very progressive currently on the personal income tax. But it may, asset wealth is, of course, another factor which is hard to tax, I should say, but That doesn't mean that we shouldn't tax them. But the question is how all of those issues come up. And if that's the reason, then the tax makes sense. But if it's because people think it's going to raise a lot of revenue, well, that's not going to happen. So our job as technocrats is just to point out, I think, what we consider are hard facts on the ground, which should guide policy. I think the last point also is it's important to know what the incidence of the tax is. You can increase the tax on corporate income tax, but corporates tend to shift that to their consumers. Not all of it, but a lot of it. So one needs to take that into account. I mean, reducing a tax, for example, like that, doesn't necessarily mean that it's a benefit to the wealthy, which many people like to say, but because they're not looking at the incidence of the tax. And importantly, what's the actual impact? We want to support businesses. Businesses employ people. Whether they're in a private or public sector, they pay taxes. And the issue then is how do you try and stimulate more businesses so that you get more employment? So these are the types of considerations that go behind tax policy. And I should add, though, tax policy also changes incrementally. It's, we don't want to create uncertainty. When people look at a tax, they see it around for at least 5 years, if not 10, 20, 30 years. And so, by and large, keeping the tax in the form that it is and not changing the rate too often helps to generate certainty. The more you make changes, the more uncertainty you are going to create for businesses. And in a sense, that becomes a factor when people consider investing in South Africa. Next slide, please. So, Chair, I think just for this presentation then today, we've not tried to deal with issues of compliance and administration. These things are all connected. There is a saying that goes that tax administration is tax policy. Frans will correct me. I don't know if I've said it correctly. But to the extent that you don't have administrative capacity, there's no point having a tax if you can't actually collect it and if you can't enforce it. So SARS' role and capability is critical. We're not discussing the role of SARS or its challenges today. There were many questions that came up during the budget hearings. Today, we're just focusing on the policy issues, but those other issues are important. The other issue that came up during the hearings, tax morality, because a lot of the underlying issue was people were saying there's corruption in the state, we don't trust how the state spends the money, there's no value for money. I think those are legitimate, very legitimate concerns. And there's no doubt they impact on tax morality. And if people don't feel like paying their taxes, then it creates huge problems for us to collect. You can't enforce and punish everybody or many people. You have to ensure that those are just a minority and that most people accept what the state is doing. And so we've got to promote that confidence amongst taxpayers. With regard to the commissions, we were in the process of, we've already started implementing the Nugent Commission's recommendations. And in fact, what's left are the governance reforms and legislation. But then Judge Zondo, also in the Zondo Commission, took on the issue of SARS. And though there is a report, the president has noted that government will respond more formally once the final report is given. And the final report is expected to sum up or to give further details on all the recommendations. So it does kind of just have some implications on the program we had to introduce legislative amendments to the SARS Act. And we're just trying to get clarity on the timing. But work is at an advanced stage even on that. Chair, we won't deal with the tax statistics. I know it was published on the 25th of January this year, but this is published annually. And it's worth honorable members just glimpsing through it because it has lots of text data that we try and inform the public. So all the above are important issues. We don't deal with them today, but we're very happy to come and have, if there are any dedicated hearings for those at an appropriate time, Chair, we're very happy to come and talk about those issues. Chair, I guess I got to say all these things because generally the focus outside tends to be on, in the public, on the expenditure side, and the tax issues don't get neglected, but I think people perhaps don't understand its full role in the budget process. Next slide. So, Chair, and I'm going to get the team to start coming in, but just to point out that the substantive tax policy and revenue proposals are always in Chapter 4 of the budget review. Then there are the more technical proposals, which are presented in Annexure C, and these are often things like correction of unintended anomalies, revenue leakages, loopholes, people gaming the system, and also tax administration issues tend to be dealt with in Annexure C. So, the policy has been decided in the past. The only issue is the policy doing what we intended? Have there been perverse outcomes? Are there people who are using it to do tax structuring? Or how are they avoiding paying their tax? Are there loopholes? So when those come to our attention, and in fact, every year we have a round in late November, early December, where we ask the public, and that's where the tax advisory community and those who know what's happening on the tax side tend to write and say, but there's this anomaly, and we assess it, and then we decide whether to correct it or not, or if it needs correction. I won't deal with the other slides. I've said that the rates bill has been published, deals with rates and thresholds, and that the more complex proposals are for the TLAB and the TALAB. Next slide, please. So, Chris, why don't you take over? I've spoken more than enough. I'm sure members are bored of hearing my voice. So can you come in now? And Younger and Franz will then come in. I think people know which slides they have to talk through. I'll come in at the end, Chris. Thanks. Or when I have to.
Okay, thanks, Mama. Good morning, Chair. Good morning, honourable members. I'll go through some of the revenue and other issues related to tax. So I think the first thing to note, which was probably the main headline from the budget, is the very large revenue surplus that we got and we are expecting for 21-22. So we're expecting its revenues to be about 182 billion higher than the 2021 budget and about 62 billion higher than the 2021 NTBPS, which was only a few months before the budget. A lot of it really does flow from corporate income tax. If you look at the table below, you can see companies there, and in green, the difference is about 105 billion higher than compared to the previous budget. The next largest was personal income tax, which was also much stronger than we thought. Unemployment was really high. We thought it would weigh down on earnings, but earnings remained quite robust overall. So we actually got quite a lot more on personal income tax as well. Consumption was a bit higher, but certainly not as much. And you can see that with this very large increase in revenue, our tax to GDP, which was hit a high at the global, just before the global financial crisis on the back of a commodity price boom in that period, at the end of the 2000s, dropped quite dramatically, took a long time to recover to the same level, even after a lot of tax increases, dropped very strongly through the global pandemic, but has bounced back incredibly sharply. So we now are expecting a tax to GDP record of 24.7% using rebased GDP, and that should go slightly higher over the next few years as well. So if we look at, well, where did this come from in the companies? It really was, the majority of it was from persistently high commodity prices over the period. if you look at this bottom right chart, this is the tax revenue contributions from mining. And you can see that from using the other line, the colored lines from 4, those are from previous years. There was a bit of a spike at the end of 2020-21 as commodity prices had gone higher. We didn't expect those commodity price increases to continue, but they most certainly did into the next year. And you can see in June 2021, there was this huge increase in mining revenues, as well as in December, even though commodity prices had softened a little bit over this period. And if you compare that to, say, manufacturing, which is the second largest company contribution usually, there was also a nice bump in manufacturing, but you can see nowhere near to the extent as the increase in mining. So it really did come from mining and those commodity price increases. We think around 60 billion out of the 100 billion came from mining. But also manufacturing and finance outperformed as well. So there has been a broader general recovery. Growth isn't that much higher compared to what we thought, but the tax recovery is certainly a lot higher. If I just go back to the previous slide, we were thinking about revenue in the way that it reacted after the global financial crisis, where there was this huge drop and then it gradually increased. Yeah, we've had also a drop, but not as bad, but a very quick bounce. And we think it's because of the different types of recessions. In the global financial crisis, there's this structural weakness in the economy. If you can't get credit because financial services firms are struggling, that doesn't provide the space for companies to then grow, to get that credit, to invest more. In this case, there was sort of an intentional restriction of activity. So when those restrictions are relaxed, activity can resume very quickly. And I think it's shown in this quick bounce back in revenues. Just to go through to provide some color on the revenues as well. You can see the top 3 taxes make up about 80% of our tax revenue. So personal income tax, which is a tax on income and profits, value-added tax, which is the second largest, and the tax on corporates and income, which is the third largest. So all those 3 make up 80%. The fuel levy is the 4th largest, which is quite a bit below, and then import duties. So most of them are on income and profits, with value-added tax also on consumption. If you look at how they've changed over time, these are the proportions of each type, the 3 main taxes against total GDP. You can see from the crisis onwards, the global financial crisis, personal income taxes have really just continued to increase. Over this period, it was mostly due to tax increases. We increased the increased the marginal tax rates by 1 percentage point, and we introduced a new top rate at the top. And we didn't provide much relief for inflation. There was quite a big dip due to the COVID pandemic. VAT stayed pretty flat, but then there was an increase as we increased the VAT rate after 2018. And corporate income tax revenues have just been going down, and it's mainly due to reductions in profitability and lower than expected economic growth. We'll see that figure for 2021 to 22 jump to about 5% for this next year. That's what we expect, given this commodity price boom. So where are we? I spoke a lot about what are the drivers of our tax policy decisions. We try to look at other countries. We try to look at the mix between the different types of taxes. We try and look at where the incidence of the tax changes will be. If you have a sort of an overall look at, well, how highly taxed are we as a country? This chart shows the different levels of tax based on whether you're a low income, lower middle income, upper middle income, or high income country. And you can see we don't have as high tax as those in the high income countries. A lot of them have much higher levels, but we are at quite a high level compared to other upper middle income countries. So we are relatively highly taxed given our level of development, but we aren't as highly taxed as some of the other more developed economies. If you look compared to Africa, we are quite close to the top in terms of other African countries, but we are below the OECD average there. I think the one thing that's unique about South Africa amongst other developing countries is our very heavy reliance on taxes on income, profit, and capital gains. So this is a chart, which is quite a nice chart from the OECD, showing and ranked by who has the highest taxes on income and profits. And you can see there's Denmark, there's Australia, there's New Zealand. And we are 1, 2, 3, 4, 5. We're the 6th highest in the world amongst developed and developing countries for having the highest taxes on income and profits. Now, part of that is because our social security contributions are so low. But our social security contributions are so low because, payroll taxes are regressive taxes, and they reduce the incentive to employ more people, especially at the lower income end. So they would really not fit in our type of context, where we need to get more employment and we want to have a very progressive personal income tax system. So we are quite unique in that we are quite heavily reliant on these. If you look at this next chart, if you look at South Africa, this is the proportion of different types of revenues. The dark blue is personal income tax, the light blue is corporate income tax. And we see we have a very large percentage there. If you compare it to OECD, we are higher than OECD countries, we're much higher than Latin American countries and in African countries in terms of our reliance on those tax instruments. This is another just indication of where we are with personal income tax. We have a very progressive personal income tax system, which you will see in some of the distributional tables later. But if you look at this on the axis on the left, you can say, what is the top personal income tax rate? Our top rate is 45%, which is over there. And how much do we get from personal income tax as a share of GDP? It's about just below 10. And you can see this is also ranked by a type of development of the country. And we really are sitting with all these other high income countries where we have a high top personal income tax rate and we get a very high percentage of revenues from personal income tax as a proportion of GDP. Other countries in our sort of developmental range have lower rates and lower contributions. If we look at corporate income tax, the other thing that's quite interesting is our corporate income tax take, how much we actually get from corporate income tax as a ratio of GDP, is actually quite high compared to other countries, including other developing countries. So some developed countries have quite low proportions of corporate income taxes, their overall tax take. But also with other developing countries, they have higher headline corporate income tax rates, but they have lower levels of corporate income tax as a percentage of GDP. And that's mainly because they have a lot of deductions. Some of them have tax holidays, they have some exemptions, whereas our base is a bit broader, but with a bit of a higher rate. So we get quite a lot of revenue from corporates as a share of GDP. If you look at what's happened to our corporate income tax rate over the past, say, 20 years, it's hardly changed. We had 1 percentage point decrease a while ago, but we haven't had any other decreases. A lot of other countries have been shifting their corporate income tax rates down quite dramatically. The United Kingdom and the US have changed. This slide could be updated a bit. They went down very far and now they've come back, but now they're still coming back to a level that will be below what our level is. And those are still proposals. So I don't think they've been enacted yet. So they've probably gone a little bit too far and they're bringing that rate back, but it's still going to be lower than ours. And a lot of this move from all these other countries was what led into the package that we proposed that was then introduced in this budget. If you look at VAT, the increase from 14 to 15 put us at this level here in red. We're still slightly below the median in the middle of a lot of other developing countries. So quite a lot of them have higher value-added tax rates and some of them are a bit lower. So we're sort of in the middle on that if you compare. Okay, so if we go to the proposals in the 2022 budget, I think the main consideration there was what happened with revenue. So revenue was very strong and we were quite surprised with the strength of those collections. But I must also say that it does look as if improved efficiencies at SARS are contributing to this. So that is a welcome surprise and hopefully that can flow through into revenue for later years. But given the solid revenue performance, given the need to still help households and businesses to recover from the pandemic, the 2022 budget proposed tax relief of 5.2 billion. So we made adjustments to personal income tax brackets, medical tax credits. We didn't increase the general fuel levy or the road accident fund levy. And we boosted incentives for youth employment, given our very, very high levels of youth unemployment. We also increased excise duties by between inflation and just above. We increased the carbon tax rate. We announced new taxes on vaping and others. And we went ahead with the corporate income tax package that was announced in the previous budget. So I'll go through all of these proposals in a little bit more detail. So overall, the impact is a tax relief of 5.2 billion. If you look at our one table in the budget, it's this main figure here. So we expect a gross tax revenue of 1.6 trillion, but we're going to give relief of 5.2, so which will give us about just 1.598 trillion in revenues, and that's what's expected. What comprises this 5.2 billion in relief? There's an expansion of the employment tax incentive, which we think will cost us around 2.2 billion. And there's the freezing of the general fuel levy, which would also cost us about 3.5 billion. But we should get some of it back through slightly higher than inflation increases on excise duties on alcohol and tobacco. So if you sum those up, 2.2 minus 2.2 minus 3.5 plus 5, and you'll get minus 5.2. The changes to the personal income tax brackets won't change revenue for us because we assume that they're increased by inflation. And the corporate income tax package is not expected to cost us any additional revenue. The reduction in the rate should cost about reduce revenues by about 2.6, but the two brace broadening measures will offset that so that there won't be any overall impact. If we go through the personal income tax changes, what did we do? So we increased the brackets and the rebates by 4.5%. So if you look at the table at the top here, if you earn between 0 Rand and 216,200, you get taxed at 18% of each Rand. So by increasing the bracket to 226,000, that means that, let's say you were earning 220,000. Previously, you'd be paying tax at a rate of 26%, but now you're paying tax at a rate of 18%. So the small increases in your income won't push you into the next bracket. So it provides relief and lowers the effective tax rate for individuals if they have any increase in taxable incomes below 4.5%. The tax-free threshold was then also increased by 4.5%. So in the previous fiscal year, or it's the previous personal income tax year, it was 87,300, the tax-free threshold, if you were below the age of 65. Now it's 91,250, so we've increased that tax-free threshold. Medical tax credits will also increase by 4.5%, so that increases it to 334 Rand per month for the first two members and 234 Rand per month for any additional members. If we look at the distribution of personal income tax, we included a table in Chapter 4 in the budget. You can see overall at the bottom here, we expect about 7.4 million taxpayers to be contributing towards personal income tax. Taxable income is about 2.7 trillion, and we think we'll get about 587 billion in tax. The important point to note here is that we have a very progressive system. So over 42% of personal income tax is paid by those earning over $1 million, which is about 333,000 individuals. So 333,000 individuals pay 42% of personal income tax. The relief that we provided, which is in this column, it compares to if we didn't provide any changes in the brackets. So by changing the brackets by inflation, in effect, we're foregoing 13.5 billion in revenue. And most of that revenue foregone by changing the brackets for inflation sits in the middle of the income distribution, as that is where most of the taxpayers lie. This is a chart that we've put in because we see a lot of commentary on taxpayer numbers and the dwindling South African tax base. So we've tried to look at the income data that we get from the South African Revenue Service, which is the micro data. So we get anonymized micro data. So per taxpayer, we don't know who it is, and we can see their incomes and what has happened over time. So if we look at that data and we combine all the information that's available to us to try and look at what happens to taxpayer numbers over time, this is the table that you get. So you can see from 2010-11, we had about 6.3 million taxpayers, and it's generally gone up until about 7.46 million taxpayers in 2019-20. So this is just before the COVID pandemic. We haven't got the latest available data for 2020, 2021 yet. I would assume that would show a reduction in the number of taxpayers given the impact of the pandemic. But over this period up till before the pandemic, we have seen a general increase in the number of taxpayers. The interesting thing here is that between the tax-free threshold and 150,000, the numbers have actually been going down. Whereas in all the other categories, including those earning above $1 million or above $1.5 million, have actually continued to increase. And that's what we see in the data. So we still are very worried about taxpayers leaving the tax net, especially at the upper income level, because that's where they contribute the most. But overall, we haven't seen this large drop in those figures in this period up until 2020. We'll have to see what happens from the pandemic and the latest data and what that will show, and we can provide an update to the committee on that when we get it. The other quite large personal income tax proposal that was included in the budget is this proposal for a two-part system for retirement. So it has been announced by the minister. We published a discussion paper on this in December last year, where we've gotten comments. And we are now going to be holding public workshops with stakeholders to discuss those comments to try and move forward with the particular policy. So this will have very large implications for personal income tax. If we have a two-part system where individuals can access one pot at any time, but the other pot they don't need to access until retirement, we need to think about the correct personal income tax treatment of those. We put in a few options into the discussion papers, and those will need to be consulted on and discussed as we move forward. There will be very large revenue implications based on which option we choose, so we need to be quite careful in how we put that together. But we will be working on that and consulting on those proposals going forward to hopefully then get draft legislation to be published in May, and then we can have another round of draft legislation in July after we've gotten comments on that in the first draft. The next major personal income tax change in the budget was an expansion of the employment tax incentive. I think there's quite shocking youth unemployment figures, especially as a result of the pandemic. Over half of all youth between the ages of 20 and 29 are unemployed, those who are looking for work. So that's a very, very large number. There's a structural problem in our economy with youth unemployment. And the employment tax incentive was introduced in 2014 to try and be one of the measures to help this. So the incentive has been reviewed many times. It was discussed in NEDLAC in 2018. The NEDLAC report that was then submitted to the Standing Committee on Finance said that most of the research it had seen and commissioned did demonstrate positive effects, which then led to an extension in the incentive until 2029. That was 5 years longer than we were actually, as Treasury, were proposing. The NEDLAC committee came back and said we should rather do it for 10 years, and the Standing Committee at the time agreed to that. So to assist businesses to employ more youth, given the dire youth unemployment figures, the monthly value of the incentive was increased by 50% in this budget, from 1,000 Rand per month to 1,500 Rand per month for employees in their first year, and from 500 Rand per month to 750 Rand per month for employees in their second year of employment. This is just for qualifying employees who are between the ages of 20 and 29 and have not worked at that employer were not in employ at that employer for 1 October 2013, I believe. That, I mean, just another point on that, that value of 1,000 was the same value that was put in 2014. So we hadn't changed it for quite a while, but it is quite a large increase there to try and promote youth employment. The next major proposal was what was announced in the 2021 budget. This was the restructuring of this corporate income tax package. We were trying to broaden the tax base, but also to reduce the headline rate from 28 to 27%. So the two base broadening measures, those were to restrict interest deductions to combat base erosion and profit shifting, and also a restriction of assessed losses, were legislated through the Standing Committee last year, and were then put into the Taxation Laws Amendment Act from last year. The only change we made there was that the effective date was dependent on an announcement by the Minister of Finance. So the Minister then did announce that those would go ahead in this 2022 budget, and alongside those two base broadening measures, the reduction in the corporate income tax rate would take effect. And that's for all companies with years of assessment from 31 March 2023, years of assessment ending on or after 31 March 2023. I spoke about the revenue impacts previously. I did also show this slide in the public hearings on the budget, but this is just to show the sectoral impacts of these changes overall. So if you look at the total fiscal impact, there's no overall impact on revenue, expected. And if you look at the different sectors, who will it benefit and who will it lead to slightly higher tax liabilities? So agriculture, manufacturing, transport, construction should have slightly lower tax liabilities, but this is all from pre-COVID data. So there might be changes to this, but in the longer term, this is sort of what you would expect. Whereas those from finance, wholesale and retail trade, electricity and mining should pay slightly higher tax liabilities. There's been a lot of work done by the World Bank on different effective tax rates across the sectors, and they were showing that these sectors are generally have lower effective tax rates, while these sectors have generally higher effective tax rates. There were some questions about, our industrial policy is trying to help manufacturing, but then our tax policy system has slightly higher effective tax rates for manufacturing. So are they working at odds with each other? And this proposal does go some way to trying to neutralize the differences in these effective tax rates across sectors. If we turn to excise duties, there have been some very large increases in excise duties on alcohol and tobacco over the past few years. Last year was an 8% increase across the board for all types of alcohol and tobacco. We follow a policy guideline of trying to get a tax burden of 11%, 23%, and 36% of the weighted average retail price for wine, beer, and spirits, and 40% for the most popular brand for cigarettes. Now, our tax burdens are a bit higher than these guidelines. As a result of that, we've said that we will be releasing discussion papers on the alcohol excise duty regime and on the tobacco excise duty regime, which we plan to do this year. So the excise duty changes this year were in line with inflation for some of them, about 4.5%, and some of them were slightly higher at about 6.5%. You can see, say, for unfortified wine, it was 4.5%. For beer and ciders, it was 5.5%. Spirits, 6.5%, and for cigarettes, 5.5%. And we used the burdens that we see on these different products in order to create the differential increases there. We did also do an inflationary increase in the health promotion levy. This was introduced on 1 April 2018 at 2.1 cents per gram of sugar, but we also introduced a tax-free threshold of 4 grams of sugar per 100 moles. The rate was increased on 1 April 2019 to 2.21 cents per gram. And in this budget, we increased it to 2.31 cents per gram from 1 April 2022, a 4.5% increase. Just on this levy, we have seen a few recent studies that have been shared with us to show what the impacts of the levy were. it looks as if sugar-sweetened beverages did increase their prices after the levy came in, but there wasn't an increase in the price of beverages where there was no health promotion levy applied. And that increase in prices does appear to have reduced consumption of those sugary beverages. So it's led to lower consumption, especially amongst lower income households, which is part of what we were trying to achieve with the policy to reduce the consumption of these beverages. There's also been a very strong response from industry because of the levy. They've reduced the amount of sugar in their drinks. By reformulating, they've reduced the size of the drinks that they sell, and they've promoted more drinks with less or no sugar. So we think it has had a positive impact, and this inflationary impact increase in the levy will assist with trying to reduce the number of non-communicable diseases in our economy and improve the general health of the population. We did also announce...
So Chris, sorry, if you can just mention that it doesn't apply to 100% fruit juices. So just the announcement that was made, I don't know if you didn't, have you mentioned it yet?
No, I haven't. So
not in the slide, yeah.
No, we didn't put it in the slide. So there were two additional aspects to this policy that we proposed in the budget. We said that we wanted to consult on removing the exemption for 100% fruit juices, and we were looking at lowering the 4 grams of sugar per 100 ml threshold. So those two measures we were going to consult on this year. I don't know if you want to add more on that.
I see Mpo is around. I don't know if he wants to add, but I'm fine.
Okay, thanks.
No additions
yes.
from me, Chris. Thanks. No additions from me. Thanks.
Thanks. So we'll consult on those other measures as well on the health promotion levy. On vaping, so this is electronic nicotine and non-nicotine delivery systems, or vaping. We published a discussion paper in December of last year on trying to introduce a tax on these products. I think the main point to note here is there currently isn't an excise duty on these products, but they're a very close substitute to other types of products where there is an excise duty. For example, heated tobacco products or regular cigarettes. So there really isn't a level playing field amongst these different types of products, and we do need to introduce a tax on vaping. In the discussion paper that we published, we put forward different types of policy options to consider. And one of them would be based on the nicotine content of the liquid in the vaping devices, or on just on the overall solution, or a hybrid approach, which looks at both the nicotine and the non-nicotine amount within the solution. So we received a lot of comments on this discussion paper, and in the 2022 budget, we proposed that the policy option we should follow would be basing the levy on the solution alone. So just at R2.91 per mil on those solutions in the vaping products. This would lead to a much simpler administrative system for the introduction of this new tax, and it's an approach that's followed by a lot of other countries. We still need to have public workshops on this proposal, so we're still going to be discussing the proposal to see what works and what won't work, and we will have those consultations before we start putting draft legislation together and to publish that in June of this year. Mpo, I don't know if you want to add.
Chris, and good morning, Honorable Chair and Honorable Members. Yeah, we will be consulting.
Put on your camera, Mpo, when you talk.
You're on mute now, I think.
Chris, is he muted or is he?
Oh, it is. Mpo, you're muted. I didn't know if it was just me. You couldn't hear you.
Yeah, no, he's muted.
He's muted.
He's just... Okay, let's carry on. We'll come back to him later.
Paul, can you hear us? Okay, I'll have to carry on. Maybe Paul can join later. Okay, so that's on vaping. I'm sure Paul can add some more color to that later. On the carbon tax and other environmental levies, there was an increase in the carbon tax rate from 134 Rand per ton of carbon dioxide equivalent emissions to 144 Rand per ton from 1 January 2022. This is included in the Carbon Tax Act, so the increase applies automatically, and then we put it through in this process. And the carbon fuel levy also increases by 1 cent to 9 cents per litre for petrol and 10 cents per litre for diesel. This is also automatically done through a formula that determines the level of the carbon fuel levy based on what the carbon tax rate is. The carbon tax cost recovery amount for the liquid fuel sector has increased from 0.56 cents per litre to 0.63 cents per litre. This is because the price is regulated, so there's no way for them to make any adjustments in terms of the carbon tax that they should pay. The plastic bag levies increased from 25 cents to 28 cents per bag. The motor vehicle emissions tax on passenger cars increases from 120 Rand per gram of CO2 to 132 per gram of CO2 from 1 April. And the incandescent bulb levy also increases from 10 Rand to 15 Rand per globe. Momo, do you want to talk about the future path of the carbon tax?
Sorry, I muted myself. No, thanks, Chris. Yeah, I do want to talk about this. Honorable members, I think the carbon tax obviously is dealing with our greenhouse emissions. And in a sense, it's the one tax where investors, in a sense, want to know what's going to happen over the next 20 years. So what we've done with this tax is to try and outline just the future path of this tax. We may not legislate it all, but we may legislate, for example, for the next 3 to 5 years. We're considering how to do it. So obviously, I think Chris in a previous slide has shown the increase for the coming year. But beyond that, I think what we're saying is that in looking at the tax and the need to align with the climate change bill that the Department of Environment is also working on, we needed to align the two periods, so we've extended the first phase until the 31st December. Now, I think contrary to some commentators who have been saying it's because of corporate lobbying, I can assure you this has not been a lobby position. It's between the two departments we felt that realistically, the first phase should be extended. But we're still going to increase the tax more than what we previously said, to reach at least $20 per ton of carbon dioxide equivalent by 2026. That's just a year beyond the first phase, but there'll be a progressive increase. But that's where we see the tax going to. And the stringency of the tax has also been increased due to the removal of the carbon budget allowance then, once that bill takes effect. But Sharon can correct me if I've got that right. The second phase of the carbon tax will also have a much faster increase in the rate to at least $30 by 2030. And then it's going to increase even more rapidly thereafter, but I'll come to that. But up to 2030, in that second phase, a lot of the exemptions and allowances will either be removed or reduced significantly. So that, and bear in mind that currently companies are only charged on 60% of their emissions. Those exemptions will certainly begin to fall away. So they may start paying on 100%. And perhaps we'll also widen the scope beyond what we call others scope 2 emitters. And the rate, of course, and of course, this is a long time, Chair, and you won't be able to hold me to account by 2050. I don't know which members will still be here, but we think, nobody should be surprised if we're looking at $120 or maybe even $200 a ton. I'm sure the tax will be the least of the problems by then. It will be more like even certain types of production will likely not even be allowed by the law. But that's just to give companies a sense that this is how the world's moving and this is how South Africa will move. This approach, we think, is consistent with our nationally determined commitments and in line with globally what is felt to be how best to push behavioral changes in companies to reduce their emissions. So the other point to note, Chair, is that in fact many of these increases are also going to be forced on, because there's going to be, like, if you look at the EU, carbon border adjustments coming from other countries on our exports. So if we don't tax, people will still be taxed by the countries they export to, and that will negatively impact exports and competitiveness. So in a sense, we must prepare for the future. Otherwise, we're going to find that we will face many other higher taxes or penalties and so on. So with regard to the second phase of the carbon budget, we will be doing the consultations this year. I don't know, Charlene, I saw you here. Do you want to add on? Have I got everything right? Charlene is the expert in memory. I don't know if they are around. Just put on your camera if you do talk.
Yeah, I'm not sure they're here, Mama, but I think that
Okay.
does cover it.
I saw Charlotte was here, but it's okay. Maybe we can continue. Next slide. Chris, are you taking over again? I see Mpo is back on somewhere.
Sure. Okay. We can go through the general fuel levy and the road accident fund levy. Government recognized that there have been very large increases in the fuel price even before Ukraine, and to provide some relief, these levies were not increased in this budget. That's the first time neither the general fuel levy nor the RAF levy has been increased since 1994, I believe. So it's been a very long time since we've done this. If you look at this table, you can see that the percentage of the tax as a percentage of the fuel price now is quite low. So it's gone down to about 31% for petrol and 33% for diesel. So 2 years ago, it was above 40%. That's because prices were a lot lower. And the fuel levy is not an ad valorem rate, it's an excise, so that it's the same level based on the amount of fuel that you purchase. And because it's gone up slightly, just by 1 cent because of the carbon fuel levy increase, it stayed quite low as a percentage as prices go higher. If we look at the, Mama, do you want to talk about this?
Okay, yeah, let me come in. So, Chair, I think, if you look at the fuel levy, some of us will remember when it was introduced for different reasons by the previous apartheid government, and then it had to do with funding of roads and so on. So it was the form of earmark tax. But, at some point, it just became general revenue, and currently, as you know, it is general revenue. But in a sense, it tends to try and deal with the negative externalities. So it tends to internalize the cost of, this is relatively new, climate change, but local air pollution, congestion, and other environmental externalities, amount of sulfur, to ensure that these costs sort of better reflect the harm they also cause, over and above certainly the benefits they are of being able to be mobile. So it aims to promote behavior change in both producers and users towards the cleaner, low carbon fuels and less polluting fuels. Embedded in the fuel levy, I mean, often people I know feel that the fuel levy is not fair and there's no reason for it. And yes, it is there for general revenue, but within that is to deal with the negative externalities. So the fuel levy is expected to raise 89 billion rand in the coming fiscal year that starts on the 1st of April. And as Chris has outlined, it's our fourth largest revenue item. So the reality is that if we, for example, if we were to remove the fuel levy, not that that would be good policy, let me emphasize, the point is that you would have to then raise some other tax. And 89 billion would be almost equivalent to, would be just more than 3% VAT. And by the way, Chair, and that's why I think even the campaign against e-tolls, which OUTA started, and frankly, in my view, was always misdirected and helped to undermine a real well-functioning entity like our roads SANRAL, our roads agency. And in a sense, people who own cars are at the higher end of income. There's a whole system, as you know, the e-tolls was meant to get user charges. And that approach to resist user charges. And in fact, the solution was to increase the fuel price, to put a levy on the fuel price. And now the same organization is saying to the minister, they wrote a letter to him in December, please don't increase the fuel levy. So again, who's going to pay the bill? That becomes the question. And that's a tough question that people don't answer. They come with easy solutions, put a levy on fuel, and now they say, don't put a levy on fuel because it's high. So in a sense, government needs to take all of these considerations into account. And we accept that the level of the fuel levy, not just the fuel levy, the level of the fuel price is high. And of course, as we know, the outlook is going to be quite negative given the impact of the Russian invasion of Ukraine and the subsequent sanctions. They are going to result in significantly higher prices. I'm not an expert on that. I don't know how much, but I do know it's going to go up. I think, Chair, just to make the point, developed countries, except for the US, of course, generally have much higher fuel prices than South Africa. Again, they use it for revenue and to fund, I guess, their public transport system indirectly and so on. But neighboring countries, as we know, our own neighbors tend to have very much lower levels on price of fuel. But again, it's a choice that they make. Do they, what are their best sources of revenue? And many of them are dependent on SACU transfers, but their fuel levy is very low. But that's a choice they make as a country. It's their right. South Africa, as I said, is dependent on this as a fuel levy. As you are aware, the Minister of Mineral Resources and Energy and Treasury and our Minister, we have been looking at, and this was said, at reviewing the current formula mechanism to consider how to possibly bring a bit of relief. But, I want to emphasize it will be just a bit of relief. At the end of the day, South Africa is going to find it very hard to get away from the fact that the two big drivers of this cost, in a sense, is the international price of oil, the Brent crude, and of course, the rand-dollar exchange. I mean, those are the big drivers of this cost. And in a sense, our economy is going to be forced to adjust to this because we are price takers at the end of the day. Next slide, Chris. If you want to just deal with this, Chris?
Yeah, thanks. I think another important element of the budget, just for the honourable members to take note of, is Annexure B, where we try to estimate the tax expenditures. So those are how much revenue we lose or is forgone from providing tax deductions, tax exemptions, tax credits, any type of preferential tax treatment in the system. So we try to estimate how much that costs us each year. And the total value is quite large. It's 268 billion or 4.7% of GDP. A lot of other countries have these as well. They try to achieve, as Momo was talking about earlier, secondary objectives within the system, not just revenue raising. And to achieve those secondary objectives, they try and implement some deductions, credits, other types of deviations from regular tax positions. So the largest tax expenditures in our system are for retirement fund contributions at about 94 billion rand per year. That is just on the upfront deduction. So we don't look at the tax-free investment growth or on the tax that you recoup at the end of your retirement fund journey. Medical tax credits, which costs about 34 billion. The APDP costs also about 34 billion per year, and zero rating of goods for VAT is about 31 billion. You can see in the chart below, the vast majority is on personal income tax and then on value added tax. And then shall we go to, I think that covers all the tax proposals and measures. I don't know if Yanga would like to then go through the draft rates bill and the other measures in the next.
So,
thank you.
Yeah, let Yanga come in. So, Chair, I think one of the purposes of this hearing, what we wanted to do is, the rates bill is very different in a sense. It, as we said, it gives effects to the rate changes and thresholds. So the clauses are easier to explain, and Yanga will go through it. And what we're hoping is just to engage with Chair, just to get your guidance on how soon the committee would like to take on the process, whether you'd like to do it before the TLEP process. But we are ready to follow whatever approach is taken by the committee. Yanga, you've been very quiet, and I'm sure members will be wondering why you're so quiet, but I guess you are our legal expert, so up to now we haven't talked the law, but now's your chance. Yanga?
Hi, Momo. Good morning, honorable members. Good morning, everyone. As indicated in the beginning, the main aim of the tax bills is to give effect to the budget proposals. Without legislation, whatever that is on the budget can never come into effect. Hence, it is important that after the budget, we make the law, we draft the legislation, we publish the legislation for public comment, so that it has to give effect to the budget proposals. Generally, in a year, except for COVID-19, we have 3 tax bills. You remember during COVID, you had about 5 tax bills. So we have 3 tax bills. We have the rates bill, which is a little bit easier because it only deals with rates and thresholds, increase in customs and excise duties, as well as increases in other indirect taxes like your carbon tax. And then we have the Taxation Laws Amendment Bill, which deals with more complex issues. And the Chair, I think in your past experience, you'll see that when we do the TLAB and the TALAB, we receive a lot of comments from the tax practitioners, because that is where they advise the taxpayers on where there are loopholes, where there are structures being implemented. So hence we have the TLAB, which attracts a lot of taxpayer comments. And as well, we've got the TALAB, which deal with tax administration issues, because in terms of the constitution, we have to separate the money bill issues from the administration issues. So the rates bill is published together with the budget on the budget day. And the rates bill deals with all the budget proposals that have been mentioned by Chris in the earlier slides, because it has to give effect to the budget proposals. I don't know whether I need to go through the rates bill, because I don't know whether we submitted the rates bill in Parliament together with the slides, Chair. But essentially, clause 1 deals with the fixing of normal rates, and clause 2 deals with increasing primary, secondary, and tertiary rebates. Clause 3 deals with increasing values of medical tax credits, as already indicated. And clause 4 is more of an adjustment for formula for calculation of the fringe benefit for employer-provided accommodation. Clause 5 deals with all the amendments regarding the customs and excise duties, increase in alcohol and tobacco, plastic bag levy, globe levy, motor vehicle emissions levy, health promotion levy, carbon fuel levy, and carbon emissions levy. And I just want to point out that in this regard, in clause 5, we include these in the rates bill, and we also do them by regulations, as the primary legislation also give the ministers the power to make regulations in this regard. And clause 6 deals with increasing the value of employment tax incentive, as indicated by Chris earlier, that a policy decision was taken to increase the values by 50%. Clause 7 deals with increasing carbon tax rate. Clause 8 is increasing carbon tax cost recovery quantum for the liquid fuels refinery sector. And clause 9, clause 9 and 10 deal with the effective date for the CIT rate reduction, as well as the assessed loss restriction and interest limitation rules. Because you remember last year, during the response document, we said that the date for the CIT rate reduction will be announced by the minister in the budget. So the minister announced it in the budget this year. Because it's more of a rate change, we've input it in the rates bill. And then clause 11 deals with short title. As Momo has indicated, generally in the previous years, we normally have one informal briefings for all the tax bills and public hearings for all the tax bills. But also in the previous years, the rates bill used to be published in February, but we'll have informal briefings around about August, because we normally have informal briefings when we have already published the taxation laws amendment bill, which deals with more complex and more technical amendments. The next one slide. Chair, with regard to Annex C proposals, which deals with more technical and more complex amendments, generally, we normally brief the committee in August after we have published the draft bill in July. Because as Momo has indicated, when we put the proposals in the budget, there's not enough consultation that has happened. But when we do the draft bill in July and we receive public comments, that is when there is a lot of consultation on the Annex C proposals, which require more consultation with the public, because that's where the tax practitioners advise their clients on. So some of the key tax proposals contained in Annex C include the following. That is, Annex C is divided into different components of tax. We've got individuals, employment and savings, business general, business financial. On individuals, employment and savings, you'll see that the proposal that are key there, they deal with more on retirement reforms, because in 1 March 2021, the retirement reform came into effect, that is the annuitization. So these proposals are more on dealing with anomalous issues that are left out regarding to that reform and the effective date. And then with business tax general, as we have said in the package regarding corporate CIT rate reduction and corporate tax restructuring, is reducing the rate and broadening the base. So when we broaden the base by assessed loss restriction as well as interest limitation. So therefore, there is interaction together with the mining companies, because mining companies are taxed in a different manner in the tax system. So the proposed amendments in this regard is to try and do those things. That is on business incentive. And then on business general, what is happening is that last year, Chair, you will remember that there was a tax treatment of collateral arrangements and definition of contributed tax capital. And you remember that during the public hearings, the taxpayers were in Parliament complaining that we are hitting legitimate business transactions. So what happened is that last year, you remember we wrote a letter to you to say that we request to withdraw those 2 amendments, and then we do them this year. So on business general, that is all what we are doing there. And then on business financial, there's impact of IFRS 17 insurance contracts on taxation of insurers, whereby the changes on IFRS 17, which is the change in accounting principle, will impact the way the insurers do their tax calculation. So that is what we will be doing in this regard, so that the changes in IFRS 17 does not have an impact on the tax calculation whereby they result in paying more taxes or less taxes. Next slide. Sorry, Chair, I did the business incentive earlier, whereby we deal with the interaction between mining companies and assessed loss restriction and interest limitation rules. And then on international tax, we are clarifying mostly the interaction between CFC rules and hybrid equity instruments, as well as CFC rules and foreign collective investment schemes. And then on VAT, I see that there's a bullet there on CFC, which is not supposed to be there. On VAT, reviewing Section 72 arrangements and decisions. What happened is that in 2019, we repealed or made changes to Section 72 arrangements dealing with commissioners' discretion to issue rulings. So after we have made those changes, we said that those rulings that have been issued by the commissioner previously will either be turned into law, or those that cannot be turned into law, those rulings will be done away, will expire. So what is happening in this regard is that each and every year, we have to see if there are any rulings that need to be turned into law or will allow them to expire. So in this sense, there are about 3 rulings that need to be turned into law, and others will be allowed to expire. So that's what we'll be doing, and we'll clarify more which ones are being turned into law when we do the TLAB briefing. Next slide. I'm done with Annexure C, and then Vukile is going to deal with Annexure F.
No, I'll do these. I don't know if Vukile is here. He's on leave. So, Chair, yeah, thanks, Yanga, for the Annexure C. And I think you've outlined that the detail will do when we actually have the bill, and there still be strong consultation processes. I think, Chair, just on these, I'm not going to spend time, but just to point out that other chapters also have an input on the tax process. So, for example, we talked about the carbon tax and climate change, but we also have a whole process on what we call the green finance taxonomy, to get a voluntary system to investors want to know what, many investors, and an increasing number of investors want to know what are genuinely green investments. They want proper standardized disclosures and so on. Now, in the world, there's no one standard yet, but we are trying to develop a whole proposed framework for disclosures for ourselves. So we've also got papers. Chair, we've got papers generally on many of these things, like Chris had already outlined, on retirement, on oil and gas exploration, on sustainable finance as it's called. So these are all sort of also dealt with in a chapter, just updates. And on the retirement ones, aside from the two-pot system, the objective is to get us as South Africans to save more and to broaden coverage through auto-enrollment, improve governance. They're not all tax issues, but they just wanted to bring this to your attention. Next slide, please. And I think there's a range of proposals that are, again, not maybe directly tax, but important to note. It's to deal with the FATF mutual evaluation review. We will be introducing legislation to improve our capability to fight financial crimes and bolster the fight against corruption in the first instance, but hopefully that will help us prevent to be grey-listed. We've also stated there that the draft paper we have on an inclusive financial sector for all, which deals with our approach to financial inclusion, which we hope to finalize. We've taken comments, had consultations. Then the process in the Financial Sector Transformation Council, We're hoping that they will conclude their review of transformation targets in the early part of this year. We also continue to point out that we're making changes. We're continuing with the changes that we've stated before on modernizing our capital flow management. And we've also taken steps to harmonize offshore limits between even the different types of funds and incorporate the Africa investment within the limits, because funds find that there aren't enough investable funds in Africa. And I think so we've done that. We've also Regulation 28 of the Pensions Fund Act. We should hopefully gazette that in the next week or two. That will enable funds to invest more in infrastructure. And of course, something we've already dealt with in the budget hearings, just the support to small businesses through the so-called bounce back loan and equity scheme. Next slide. So Chair, I'm just pointing out these are in Annexure F for honorable members if they want more detail. So Chair, just to conclude, I think the purpose of today's hearing really was to focus on Chapter 4 and Annexure C of the budget review. Obviously, we've really focused on Chapter 4, and but just pointed out Annexure C is relevant, and so are other annexures like B and F. They do provide valuable information or initiatives on related issues. The key proposals, of course, were the reduction of the rate of CIT, the increase in the carbon tax, future path tax on vaping products. The overall tax proposals, as we've said, are driven by the state of the economy, the need for growth, the need for whatever level of revenue given the expenditure levels, and the secondary objectives that are more environment and health related. But just to remind members, taxes are blunt tools. It needs complementary measures if it is utilized, but also we need to be mindful that it must promote certainty for the long term. The worst message to send out is that we are ad hoc in our tax approach. Every time there's potential revenue, we introduce a tax, and then which kind of makes investors more nervous. We just need to understand the consequences of being ad hoc, and also I think just to point out that aside from taxation and borrowing, user charges are important, and I think that's an area we're going to continue to need to explore and almost reverse the kind of culture of not paying for user charges in our country. It does impact then on the tax system. I've said when the tax process starts in the coming bills, I won't deal with it. And let me end with a point that, Chair, I think the Minister made this also clear, that this year, in order to support growth, we were succeeded in not increasing your PIT and personal income tax and VAT, which are really the big cash cows if we need significantly more money. But however, depending on future budget decisions, on how the review on the grant system or, NHI or education, could be any expenditure, it doesn't matter, it doesn't have to be these, that depending on their size will have an impact on especially these two taxes if we require, if there's more funds for an SOE and it requires 30 billion, that's equivalent to at least 1% PIT across the board or VAT, just to give you a sense of scale. So honorable members, I think we'll stop here. We've been long enough just to give you a feel for what is in Chapter 4 and some of the related chapters. So thank you, and we're ready to take questions, Honorable Chair.
Okay. Thanks, Momo, and the entire team from National Treasury and SARS for the presentation. Now it's time for members to engage with the presentation. Dr. George, over to you.
Thank you, Chairperson. Thanks very much for the presentation from Treasury. It was a very, very interesting, as usual, presentation. I just want to start off with a comment. There's quite a lot was spoken about taxpayers not wanting to pay user charges, etc. That is in fact so. And I think that the problem that we have in South Africa is that tax does not return enough value for taxpayers. And that is their perception. And therefore, their appetite to pay the tax in the first instance and then pay additional tax is low. And also, it drives taxpayers away. As we've seen now with a reducing tax base, many well-earning taxpayers are choosing other jurisdictions. So that is an issue. And it's very important that government consider how it's managing the money it receives from the people. I just want to ask something about the fuel price here. Now, my understanding is that there's 4 basic elements to that fuel price. It's the basic fuel price, it's the tax on levies, it is the retail and the wholesale margins, and then there's the storage and distribution costs. So there's elements of this fuel levy or the fuel price. And the minister did in his budget say that he was going to be engaging stakeholders, etc., because obviously the fuel price is too high. It's impacting on inflation. It's making people many times more even poorer than they already are. So and that might get worse. The basic price might get worse because of the war going on in the Ukraine. So has Treasury factored in any reduction in the fuel levy then, given if you see those elements and the promise that the minister has made in terms of his engagement, because there doesn't seem to be much space in that price. My understanding is that the fuel levy comprises of the a per litre levy on petrol and diesel, and then a charge for the road accident fund. So yeah, those are the elements, but I'd want to know whether Treasury is factoring in a reduction on that levy, given that it stayed the same and the minister did make some promises. Then on the so-called sugar tax or the health promotion levy, do you conduct ongoing studies so that you can see what the impact is of this tax? Because the articulation is that it is to influence behavior, and to some degree it seems to have done that. But do you actually do calculations to work out, we're getting X amount in the tax, this is the burden it's placing on the people, this is how it is reducing then the overall cost of healthcare based on the diseases that come from that, for example? I mean, I know that it's complicated, but I'd like to know whether you actually do that or attempt to do that. And then also on the plastic bag tax. Now that's a 12% increase. Now it might not look like a lot of money in terms of the cents, but it is a very big increase. Now, why is it such a big increase? It's a 12% increase. And why so? And also, have you done any studies on whether this tax has actually changed behavior? Yeah, I'd like to know that. Yeah, that's it. Thanks, Chair.
Thanks. Honorable Sarpen.
Thank you very much, Chair. If you'll just allow me to keep my video off, I'm having bandwidth issues this morning and keep getting warnings that my bandwidth is low. Chair, I just have a couple of questions as well, like Dr. George, and that is with regards to the general perception amongst taxpayers that there is no value, or there's not as much value derived from tax as should be, which leads to situations like organizations like Outer forming, precisely because of those perceptions. What does the National Treasury actually believe is the solution here? Obviously, we've got to have increased confidence in government's ability to do its job. But this is now going to become increasingly a threat to the fiscus, is the fact that citizens don't have confidence in the state and its ability to fulfill its functions. And as a consequence of that, more and more people are threatening to, and in many cases, going to court and successfully withholding some of their taxes. You see that with property rates in municipalities in the northwest, for example, where residents have successfully gone to courts, have been able legally to withhold their rates in the municipality and take over running of services like water treatment plants. And what does Treasury see as the path to reversing this trend, to ensure that the state continues to be viable and confident and maintain the confidence of citizens in order to maintain its tax revenue? Then, Chair, my second question is in relation to the adjustment of personal income tax brackets to account for fiscal drag. If you look at the effective fiscal drag as it has been over the last 10 years, and you look at the adjustments that has happened, while there has been the annual adjustments, it's not 100% in line with the effects of fiscal drag. Is there space in the fiscus to ensure this? Or is it that a consequence of all sorts of new spending, you hear about the NHI and so on, going to make this impossible? And as a consequence, we see that it's not going to get a full, proper fiscal drag adjustment. Then my third question, Chair, is in relation to the fact that tax to GDP has actually increased. I think this demonstrates that there is a very, very good and efficient tax system when you consider that the GDP itself has been stagnant over the last decade, that the state has become very, very good at getting taxpayers to pay and maximize revenue from taxpayers, but it's not sustainable in the long term. And what measures does National Treasury think is possible through the tax system Thanks very much. That's everything from me.
Anyone to make an input or ask a question? Okay. Back to you, National Treasury and SARS, to respond to the questions asked by the two members.
Sure, Chair. Let me just start with the more general questions from both Mr. Sarapen and Mr. George, Honorable George. I think, yes, tax morality is critical to get taxpayers to pay. And there's no doubt, like we saw in the first 10, 15 years of our democracy, that when taxpayers had confidence that if funds were given to the fiscus, it led to improvements in health or education, or the potholes in the roads that were not there. People are really, I think, happy to actually pay because they know they need all of those things. Of course, even then, we felt that there were still challenges and so on, but that was certainly makes it easier. I think that, with all the evidence around the State Capture Commission and so on, confidence has been seriously dented. And this does create a lot more problems for SARS, aside from the fact that the enforcement mechanisms were also weakened. So in a way, these things can be self-reinforcing. If we don't tackle corruption, we don't tackle poor spending, then more people are less likely to want to pay, whether it's user charges or a tax. So, I take the point from both the questions. And really, look, our side is only responsible for tax. So we don't really, we're part of the process, obviously, where spending decisions are made, but we don't deal with the quality of spending. I think all the measures on zero-based budgeting some of the procurement reforms that you need, and most important, just to make sure that public servants and political leaders who are responsible for these funds are honest and trying to always act in the public interest is going to be important for the country. Now, I think the government is taking various measures in that respect, and in particular, I think we all await the Zondo Commission's final report, where it appears there's going to be pretty strong recommendations to take. Now, I'm not saying we need to wait on that because some things, to do that are pretty obvious, but those are the challenges that we face. And I think the minister has made those comments in his speech, and certainly the president has made similar comments. So how we deal with it, I think certainly our political leaders will have to lead on that. And certainly as officials, we have to make sure that we help them clean up the state to make it functional. And I think the whole issue of state capability is a big challenge because it is at a fairly low point now, if not the lowest point for a long time. And how we get back that capability is going to be critical. I think it doesn't help when we see stories of Baragwanath Hospital, Charlotte Makeke Hospital, burned down, not being fixed. Those don't inspire confidence. So yes, I think Treasury recognizes very keenly the need to deal with corruption and inefficiency in spending and so on. And hopefully, those measures then will help to turn around confidence back in the state and get our tax capability to be functioning better. Because I think the commissioner has said we need our taxpayers, and everyone's a taxpayer. It's not just the rich. We need the country, everyone who lives here pays some form of tax, whether it's VAT, PIT, whatever, that they have confidence in the government on how it spends the money that we hold in trust from taxpayers. It's their money, it's not our money. And I think that's an important point to note. I think with regard to the other issues, I'm going to ask the team to come in. But let me just say on the fuel levy, I think that's in process. As I said, the two big factors are the basic fuel price, Brent crude, and the rand-dollar exchange. Obviously, the fuel levy is there, but if I remember, there's about 8 different levies or charges incorporated in a fuel price. And there's been a review that's been done. And, to the extent that the revenue is not, and the fiscal framework's not affected, obviously, those are being considered. But whatever we do, I think you're not going to get, you can't really be protected from what's happening internationally. And of course, as I've pointed out, that the state too is dependent on some of the big taxes, especially like the fuel levy, for revenue. And the amounts you're looking at are pretty large. So we are between a rock and a hard place. I don't know what's the solution, but the review process review between the two departments has started, and hopefully will produce some outcome. But at the same time, I think we mustn't let expectations go out of control. The realities on the ground is that the price is increasing dramatically, given all these other factors. So we'll report on it once that the process is completed. I'm going to ask Mpo to come in on the sugar beverage levy because, and let me say, nobody has said that the only factor for obesity is consumption of sugary beverages, but it's a significant factor. Honorable George, I don't think you were in Parliament, you had left before you had come back. But we had an extensive process, especially not just from the industry, but certainly from the health sector. I think we just saw how capable and how researched this topic is. And the whole issue of diabetes and what do they call it? I think NCDs, non-communicable diseases, or something like that. And I think they continue to do extensive research. So it's hard to say only this one factor will make a difference. But as Chris has shown, even the industry itself has reformulated. So that alone shows you how sometimes a change by industry on their products actually makes a big difference and can assist. But more than that, you need education as well. But Mpo, you want to come on and put on your camera and don't mute yourself this time.
Thanks, Momo, and thanks, Honorable Chair and Honorable members, for the questions. In terms of the work and the studies that have been done on the impact of the health promotion levy, that has mainly been coming from the academic side, especially the School of Public Health at Vets that have done a number of studies looking at the impact of the health promotion levy. But from a government side, we haven't done an analysis to look at basically the health outcomes of the implementation of the levy. Because as Momo has already indicated, I mean the issue around obesity and the risk factors for obesity are multifaceted. So basically, it is about the whole food environment. It's not only about the sugary beverages. So the implementation of a tax on the sugary beverages was just kind of one step in dealing with what is obviously a risk factor for obesity and non-communicable diseases. But I think in terms of assessing the impact, it will require dealing with the whole food environment that contributes towards non-communicable diseases, and then also observing the impacts of the policy interventions over a longer term period. Because I think since the implementation is quite a short period to make an assessment of just one intervention in that area, I think it will require more to be done in terms of interventions and also a longer period to assess the impact. But what we have seen in terms of the changes of from the implementation of that policy is that there's been reformulation in terms of the reduction of sugar in the products from the manufacturers, which is a positive step in the right direction in terms of dealing with the environment. But I think a lot still needs to be done, and also sort of like a reduction in consumption of this high sugar products. But in terms of the health assessment of the health impact, I think that will require a longer time to observe, and also dealing with other risk factors in the food environment that contributes to the problem of non-communicable diseases and obesity. Thank you very much.
But Chair, we can also make, I mean, the academics do produce papers all the time, and we can, make available to members of the committee some of the papers as and when we get them as well. I think the next question was on plastics. Sheldon, you want to come in some of the plastic issues?
If she's not here, maybe I can just answer that.
You want to just come in, Chris? Yeah.
Yeah, sure. So the increase was 12%. We hadn't increased it for a couple of years. So the practice that we follow is that if we haven't made an inflationary adjustment, then the year in which we do make an inflationary adjustment, we catch up from the previous years. If we were at 27 cents, I think it would have been an 8% increase, which would have been just below inflation across the 2 previous years. So we went an extra cent to get to 28. If I just quickly wanted to answer the other ones while I'm on, I mean, we haven't factored in a reduction in the fuel levies, as Momo spoke about. I mean, if you were to do that, you would need to change the fiscal framework. Paul spoke about the ongoing studies on the HPL. The interesting thing as well that we've seen with the health promotion levy is that revenues have actually gone down compared to the first year. So it was above 3 billion, I think, in the first year, and then it dropped below 3 billion and went even lower in the third year, to show that from this reformulation, we're actually getting lower revenues because fewer sugary beverages are being sold. On the personal income tax adjustments, below 3 billion and went even lower. And we did full fiscal drag adjustment this year, but the member is right that in the previous years, we haven't done full fiscal drag adjustments, and those were really used as revenue raising measures. So the same way we raised the marginal income tax rates to raise revenue, we also didn't then provide full fiscal drag to provide revenue. So I don't think we would be trying to catch up from those previous years. They were legit, they were revenue raising policy changes in their own right at that time. There was also a question on, what measures are we going to be doing to improve growth in relation to tax to GDP? I think what we've been pushing the last couple of budgets is that we would much rather have a broader base with stronger economic growth, with lower tax rates, but still to get higher overall tax revenues, which is what this is, which was what has played out this year, luckily, in terms of the commodity prices, where we've got higher revenues, but we haven't needed to raise tax rates. And our approach really is to rather have as few exemptions, incentives, and deductions as possible. And hopefully we could have lower rates, but then still letting that translate into higher overall tax revenues, something that can be complemented by improved efficiencies at SARS. And that's part of the reason why SARS were given additional resources in the previous budget, 2021. Thank you.
Thanks, Chris. I'm not sure if there's any questions for Yanga, or Franz has been very quiet. Maybe they want to say something. Yanga or Franz? Franz, you've been very quiet. Anything to say, just to show that you're present?
Thank you, Momo. I don't think I have anything to add at this stage, but thanks for the opportunity to demonstrate my presence.
Gosh, that's a miracle. You have nothing to say. Okay. Yanga?
Thanks, Mama. I've got nothing more to say.
Okay. So, Chair, I think we've answered most of the questions. I think there was a question Chris has partially answered. I mean, the issue of growth through the tax system is a difficult one. Again, we can provide papers, but if you look at the budget review, you see the stance we've taken not to increase taxes was the measure to take. I mean, like with any state, there's numerous objectives. It's not just, obviously we want growth, but we've also got to fund the budget, we've got to stabilize the debt, and those are also, help towards the growth objective. If any of those measures goes the wrong way, you're not going to get growth, for example. And we've got to have the confidence of investors. That's still the best way to get economic growth. And I think the measures that we've taken, both tax and non-tax, hopefully will help towards those measures. I think just on the issue of, like, the question on the charge on plastics, I think we really do need to do much more on the side of plastics. Of course, it's a worldwide problem. And again, the tax alone, as I've said many times, it's a blunt tool, won't solve it by itself. But we do need those complementary measures in place to try and reduce the problem of plastics that we have in the world, clogging up our rivers, impacting on our fishing, our oceans, etc. So again, we get led by environmental affairs on the initiatives that they would take in that respect. Chair, I think we're done on our side. I don't know if there are any more questions.
I see Dr. George wants to make a follow-up.
Thank you, Chairperson. I just want to get clarity on something. I think what Chris mentioned about the adjustments to the tax brackets. Now, my understanding from the budget from the minister was that there was adjustments made to the tax brackets, the income tax brackets, to account for fiscal drag. But what it sounded like is that the band was not adjusted to account for inflation in order to raise revenue, so that it didn't offset. That sounds a bit like tax by stealth, unless I missed something in that explanation. Because my understanding was that obviously we've got the tax brackets, and then we have the issue with inflation, and then you adjust them. And my understanding was that they were actually adjusted to account fully for that, or perhaps I was misunderstanding it, because that then technically results in an overtaxation. Unless I'm incorrect, I just wanted to get clarity on that, because I think that is quite an important issue. That's the one question, follow-up question that I have. And then the other follow-up question that I have is, it was mentioned on one of the slides, you know, the situation we're currently in, we know it's a difficult one, etc., for several reasons. Oh, sorry. A difficult one for several reasons. But the issue of the Ukraine, the war that's now broken out, which is dragging, we don't know how long it's going to be, etc. It's already impacting on economies, our trading partners, etc. And it's certainly going to impact on ours. There are many, well, frankly, horror stories that, you know, it's not quite clear what to believe at this early stage. But I think we can take as given that there is going to actually be an impact. And what I would like to know from Treasury is, I know it's a difficult thing to do, but how are you going to actually factor that in? Because there are things that will be impacted, for example, like we say, the basic price of fuel, etc. So what is Treasury going to be doing in that specific instance? Because obviously we have the adjustment budget in October, but now we have a very significant outlying shock event that we didn't anticipate to have. So I'd like to know how the Treasury actually navigates its way around that one. Thanks.
Chris, do you want to start off on the fiscal drag?
Okay, thanks. Yes, thanks. Thank you. So I was mentioning previous years where we didn't provide a full adjustment for inflation, which was related to the original question about if you haven't adjusted for inflation in the past, are you going to sort of catch up now? But in this budget, we did provide a full adjustment for inflation. So we increased the brackets and the rebates by expected inflation of 4.5%. So it is fully adjusted. We were criticized quite a few years ago, maybe 6-7 years ago, for tax by stealth, by not increasing for inflation. But in the budgets following those, we have then, if we don't adjust for inflation, we show that this is how much money we're going to raise. So we're not trying to tax by stealth. We are very open and transparent about if we don't adjust for inflation, we raise additional money for government. But in this budget, we did do it fully. We did increase the brackets fully for inflation. On Ukraine, quickly, Momo, I mean, on the revenue side, there will be very big impacts. The one point that will have a large influence is on commodity prices, which have stayed high and are likely to remain high as the war continues. So we're going to have these offsetting impacts with higher potential revenue from mining, as well as lower potential revenue from the knock-on economic growth. But our economic policy team are working on adjustments to their forecast, and we'll be able to talk more about that. I'm sure Momo can add. Thank you.
Yeah, look, I think it's really early to tell the exact effects, but like Chris has said, some will kind of, through higher prices on other commodities, be positive for revenue. Some will be negative for consumers, like on the oil price. Then there'll be higher inflation, so it will be, there'll be some winners, some losers. But at the end of the day, I think we all hope that, the invasion will end and there'll be peace. The president has called on the UN to mediate and have peace. That's going to be important. I think for the world, there's going to be pretty far-reaching consequences if this the invasion of Ukraine carries on for much longer. So, yeah, we're not experts on that. I think we're watching with the world, and we're all going to be affected, not just in South Africa, in Africa, in other parts of the world. And yeah, so it's too early to tell. I'm sure, Honorable George, you weren't expecting us to give you any definitive answer, but we are damn worried by what's happening. It's not good for the world. It has, by the way, just looking at it from the financial sector side, as you've seen, there's an impact on payment systems, there's an impact on, all the, even cooperation across. If we don't want to move back to some of us are old enough to know how the world operated during the Cold War, even though I wasn't in government then. But we hope we don't go backwards to that time and move forward. But yeah, we need peace. That's all I can say. It's good for the world, good for South Africa, good for everybody.
Okay. Let me get clarity here, Momo and the team. I see the 15 billion rand loan guarantee scheme for small businesses is going to be managed by Treasury and the banks. What becomes the role of the Department of Small Businesses in this regard? Because I don't see them being mentioned here in this slide.
Yes, Chair, we've had a meeting with them. At the moment, this proposal is just to continue on the previous guarantee that we had. So it will, in effect, initially start with hopefully continuing with the commercial banks and their customers, but we've not restricted it to the banks. But when we start, hopefully this month, the easiest to get started are those that participated in the scheme before, to get some of the banks to start off. But we're extending this to to our developmental finance institutions, DFIs. So we're hoping the IDC will be able to come on stream sooner rather than later. And similarly, the scheme is open subject to meeting certain criteria to small business providers, both in the public and private sector. So they would come on stream over the next few months as well. And that's where I think the Department of Small Business will get involved. Obviously also in promoting the scheme to small businesses, and other departments as well will be involved. But we are engaging with them. We've had a good discussion with them. And as I said, just bear in mind, this has come from the previous scheme where government itself was not lending. But the idea now is to get to DFIs and to other, whoever else can help. I think we're hoping to take them on board if they can add value.
Okay, I think it must be properly managed. Last time it was introduced, many deserving small businesses could not be able to access the loan guarantee scheme. And the report that we got ultimately was quite very negative. Remember from 2020, when COVID started, there has been billions of rands that have been injected in the economy in the form of stimulus packages. But it was not clear who benefited. Money went out, but it did not make such a dent in the economy. And I think it was something like 500 billion rand stimulus package. But businesses, more especially small enterprises, come to us as public representatives and complain that we are not able to access this money. I, for one, come from Guyana Malamlele. How will a small business out there, I'm closer to Punda Maria, be able to access this loan guarantee scheme? Does he have to go to the local FNB, which is much, not much, bit at a distance? There used to be a development corporation in Limpopo. I'm not sure whether it is still functional. So those are the questions that small businesses ask, that we see government talking about packages, but we are not able to access those packages. Who is accessing the package for the loan guarantee scheme if it is not those projects that are run by women, by youth, and the disabled in the outlying rural areas? I think this time there should be an improvement in this regard. The first time these packages were introduced, they were not properly managed.
No, thank you, Chair. I think what you say is, I think those are the real problems we got to solve, is how can a business in a faraway area access it, That's why we use the local branch of the banks initially, but we've realized that that's not sufficient. So we need to look at all manner of kind of reaching out. So that's the hard work that's been done currently, Chair. And, we're happy once we've firmed things up. We don't want to delay on it, so we will start with some of the banks because it's easiest. But we want to extend it to cover exactly, I think, the sort of areas that you've highlighted. And that's why we're going to need Department of Small Business. We're going to need provinces. We're going to need, municipalities, whoever has access to, that businesses have access to assist us.
Okay. There seem to be no hand for question or comment. So before we close, Alan, you said the dates for the oversight have been changed, isn't it? Where is it?
Yes, Chairperson. Due to the house sittings of next week, Wednesday and Thursday, we received communication from the Office of the House Chairperson that no oversight visits will be considered. Proposal is for the committee to then undertake the visit that week of the 20th to 22nd of April. So that's the Wednesday, Thursday, and Friday, 20 to 22 April. Thanks, Chair.
Okay. That's the only announcement.
Chair, if I may ask something?
Yes, Comrade Momo.
So Chair, I think we would also just like to get your guidance both on this rates bill, but the other bill that's quite urgent is that financial sector levies bill. We would really appreciate if that one could also be prioritized. But I'll leave it to you, Chair, and the Secretary of the committee to guide us.
Ellen, do you know how far we are with that bill?
Yes, Chair. The hearings on that will be in all likelihood after, because the first week back, which is the week of the 20th of April, that's the oversight. The next week is I believe it's the leave period for MPs because of the public holidays. So we'll schedule it the week after. So that should be around about the 3rd of May, somewhere there. We're obviously also waiting on the focus areas from the House Chairperson before we can submit the program for approval to the House Chairperson. But that is one of the first items for the second term. Thank you.
Okay, thanks. We have come to the end of the meeting today. Thanks very much, honorable members, Treasury, SARS, and stakeholders who are in the platform. Until we meet again, the meeting is adjourned.
Thank you, Chair and honorable members.
Pleasure.
Recording stopped.